Welcome back to Real Estate 101. Today we're going to continue our discussion on mortgage financing, and we're going to talk a little bit about construction loans. And I'm pleased to be joined once again by Tracey Brock of Dominion Lending Centers. Tracey, welcome back to the show.
Thanks, Joe.
Okay, Tracey, so what exactly is construction financing?
There's two types of construction financing. One involves like the big builders with whether that be residential or commercial. And then there's construction loans that involve just the individual person buying a home. So today what I want to focus on just the residential construction loans.
Okay, so when would a construction loan be needed?
Construction loan would be needed if somebody owned a piece of property or was purchasing a piece of property and they wanted to build on that home. So it's the financing to basically build that home. Tear down the old one and start up from fresh from beginning to end.
Okay, how does a mortgage work pertaining to a construction loan?
Construction loans are usually 12 months, 1 year. They're fully open mortgages and they're advancement stages.
Okay, so what about the interest rates? What are the interest rates on these types of loans, and how are the payments calculated?
Well, interest rates with any mortgage, they vary from lender to lender, but they are calculated based on the type of project, the amount of the project, like the dollar amount to do the project, and usually the payments are interest-only payments.
And are there any fees to arrange this type of financing?
Yeah, there is lender fees of 1% to 3%. It really depends on the institution. Some financial institutions may charge less than a private lender would, but there is no additional insurance fees on that, so you're not paying CMHC or Genworth or anything like that, because these lenders, whether it be a secondary lender or a private lender or self-insured, the fee is just a one fee.
Okay, Tracey, so how is the amount of financing calculated, and how much will a lender provide loan to value?
Well, a lender will provide loan to value typically based on their own risk value, but generally speaking, it's 75% to acquire the land and then 75% of the cost of the build. They'll provide financing on. Cost of build is determined through the owner of the property and the builder, and if the property is self-built, then they would have to have a full breakdown of their expenses and their costs and everything like to that nature.
Okay, so is there any flexibility if 100% financing is required to complete the build?
Yeah, absolutely. If the borrower has other properties, home or other buildings that they have equity in, that the lender can then cross-lien the collateral to just provide the financing to 100% build the project, they definitely will do that. It's always as is appraised and then as improved appraised values, so there is flexibility with that as well.
Okay, Tracey, so how are the costs to build advanced, and is there a fee every time there is an advance?
Lenders are flexible with how they advance the funds, but typically it's 4 advancements: 40% when the roof is on, 20% when the exterior is done, 20% when the interior is done, that means basically drywall, electricity, plumbing, and then 20% with the certificate of completion. Each stage there is fees, lower fees, because the lender is now putting a higher lien amount on it. So the fees are obviously varied, but there is fees at every stage. And each time there's an advancement, most lenders will take some type of a holdback between 10 and 15%.
Okay, so why is there this holdback of 10 or 15%?
Well, the government of Ontario stipulates that the lenders must ensure that the contractors get paid. So at every stage, if they hold back 10%, what they do is after 45 days of completion, lawyers will check for liens or any other disputes on the property itself. And as long as everything's fine, then they get their 10% back. If not, it just verifies or ensures that the builders and the contractors are going to get their compensation for putting the project together.
Okay, Tracey, so for today's final question, for someone that is looking for a construction loan, how do they get the process started?
Well, my recommendation is always to speak to a professional. You need to get qualified for this mortgage just in the same fashion that you would if you were purchasing a home that was already constructed. So you have to speak to a mortgage broker, get that all in place. You have to make sure you have your down payment, your credit, your income, everything has to be qualified. You need to speak to the proper builders and designers. Typically, I have a designer that I know called Timberblock that will then build the home for you, and they have designers and builders already certified and ready to go for you. So really you have to do your research and make sure that you know who you're dealing with in all aspects of it.
All right, Tracey, thanks very much for coming on today's show, and I'm looking forward to seeing you next month, and we're going to talk a little bit about some reverse mortgages.
Great, thank you very much. I like being here.
So if you're looking for a construction loan, get in contact with Tracey Brock of Dominion Lending Centers. I'm your host, Joe Terceira. Thanks for watching, and we'll see you next time.